Good morning. Today is Wednesday, April 27th, 2022. It's good to be back. It's been a week since I've been back. Had a race that I ran on Thursday and Friday last week, and then busy first couple of days this week, but it's good to be back. And we're going to start off by talking about Russia. And this is related to gas that's flowing into Europe. So since April 1st, Russia has been demanding that they get paid in Russian rubles rather than other currencies. And to date, 10 countries have opened accounts at Gazprom Bank, which is required to meet these Russian demands. And then Poland and Bulgaria have refused to do this. Tom, do you think that, and now Russia is talking about just stopping gas flows to Poland and Bulgaria. They may already have done that. Germany was getting a little bit concerned about this, saying that we need to start stockpiling natural gas now, which is very difficult to store, by the way. Natural gas is difficult to store because gas obviously takes up a lot of volume. But Germany is talking about stockpiling natural gas for the winter. Do you think this has another impact that we have not seen yet from the war, or do you think it's just more of the same, just kind of a different shade of color?
I mean, I think it's definitely an aggressive move on Russia's part. I mean, obviously, with all of the refugee activity in Poland, and specifically in a lot of the NATO forces that are hanging out there, just sort of, quote, protecting the NATO turf in Poland. I think this is an interesting tactic. It's almost like a reverse sanction, on these countries. And I think it could definitely impact oil prices. I think it's definitely going to impact natural gas prices. The question is how quickly, once they turn it off, is that going to affect, the heating situation in Poland and Bulgaria, and, what the effect is there. It's just another further escalation. I mean, I think on top of that, we've had Lavrov say that, any U.S. interference is going to cause a World War III, and I think that they're basically poking the bear, looking for a response, I think. And the question is how quickly can, the rest of the EU or potentially the US supplement that gas flow in order to prevent, probably some pretty uncomfortable people in those countries over the next couple of months.
My opinion on the whole Russia situation is that Russia is continuing to find its position weakened. I think that you're seeing this in a number of areas. I think that Lavrov comment is exactly the comment. He can't impose militarily anymore. So what are they doing? They're trying to threaten and trying to dissuade the U.S. from doing more. Meanwhile, Western powers are becoming increasingly confident. I would almost say arrogant right now. We talked about it yesterday at our portfolio manager meeting, but you're seeing people like Kirby say that they want Russia to be weaker. Secretary of State Antony Blinken said that they want Russia to end this weaker and be permanently weakened as a result of this war. That's something that's pretty bold to say, especially when they are in Germany and Poland right now. So you're basically on the doorstep of the war, and you're being as aggressive like this in your statement, saying that you want Russia to be weakened. You're also seeing aircraft fly directly into Ukraine, not military aircraft. These are people that are actually contract airlines taking supplies into Ukraine, into Kiev with supplies. And I don't think that they would be authorized to do that if the US wasn't pretty confident that they would be fine. So I think that's a positive sign. And then I think you also have the positive sign of opening the embassy in Kiev as well. So I think that you're starting to see a lot of positive signs that suggest that what's going on in the ground is Russia is increasingly weakened and less powerful, and the situation is increasingly stabilized. That might not jive with some of the rhetoric that we're seeing, but I think that that's what's happening on the ground. Tom, do you agree or disagree?
Yeah, I saw a couple articles. I think it's Bucha, which is where all those atrocities took place. There are some pictures of what it looked like 2 weeks ago with, just mass destruction, tanks flying, blown up everywhere, and what it looks like now. And they've just cleaned up the streets. They've started rebuilding already. So I think it's pretty interesting, considering there's an active war going on, that they're just going to go ahead and rebuild the city that got blown up. I mean, that seems to me like they're not real worried that they're coming back, or that they're in the made an active movement to attack. My only concern with this whole situation is if Russia is really kind of running out of gas on this war, what is the off ramp? Because I feel like, it's almost like I'm worried that the fear is one last gasp of aggression that could be irreversible. If they're really rattling the nuclear sword, are they actually going to do that? Is that something that is what's the off ramp? How do we get out of this without, are they just going to be like, my bad, and then just kind of everybody pulls back into Russia and then continue to be sanctioned? I just don't know what the off ramp looks like.
Yeah, that's a great question. I don't know that either, and I don't think anyone knows that. And certainly the West is not giving Putin that off ramp, and not that he necessarily deserves one, but you do want to wonder about that scenario, that bad case scenario. All right, markets fell significantly yesterday, dropped throughout the day, led by the NASDAQ. Interestingly, this happened even while interest rates actually fell. This is not what we've been seeing previously. Previously, we had been seeing interest rates rise, the Federal Reserve tighten policy, and stocks fall as a result. But yesterday, interest rates fell, implying looser policy, and stocks actually fell as well. So I think that this is shifting from a Federal Reserve aggressiveness mindset to a global growth concern. I think you're seeing some concerns in Asia Pacific region. I think you're seeing concerns in Europe. I think the US actually remains relatively strong. We're going to talk a little bit about how that's manifesting itself in earnings results here in a second. But if we look at the market fall off yesterday, and especially as it relates to fixed income, Tom, do you have any further thoughts on this? Do you think that this is just a retest of those lows from February, or do you think that we might potentially go further lower?
It's really tough to say. From my perspective, and I'd be interested to hear your thoughts on it as well, Jay Powell wants to squash growth and squash the jobs market in favor of limiting inflation. And I think one of the best ways to do that is to spook the stock market. Because when people see the stock market going down, their natural inclination is to be pessimistic, to spend less, to anticipate further recession. And it's almost like you can speak it into existence without having to raise rates. You can slow growth by making people feel terrible or depressed because the stock market is down. And I think we're starting to reach that level where it's possible that we don't even need as many rate hikes as initially laid out, because people are already feeling so pessimistic that, rather than buying a new pair of shoes or buying a new car, they're thinking, man, I'll maybe just ride this one for a while, put some more miles on these shoes, and see where we are in 6 months. And I think that could slow demand and potentially slow inflation more quickly than even raising interest rates. Because most people, I would say the average person, doesn't really even know that's happening. So the perception becomes the reality. It's all a self-fulfilling prophecy, almost in the opposite way of the Fed stepping in and saying, hey, we're taking rates to zero, stabilized the bond market in March 2020. They didn't really actually end up doing anything other than lowering rates. At first, they weren't really buying anything, but they said they would, and that stabilized things. And so I think the opposite is almost true, which is they're like, hey, we're destabilizing things. And even though they haven't really made those moves yet, people feel destabilized.
Mm-hmm. Yeah, I think when everything's going up in a straight line, in a positive direction, or even in a exponential fashion, what you end up seeing is people say, well, man, home prices are going up, I got to get in now because home prices are going up like crazy. And we're starting to see that as we move from an inflationary mindset to a disinflationary mindset, which we've been talking about for the last 6 months. But as we move from that mindset, you're going to have that disinflationary aspect. You're going to still see home prices increase, but you're going to see some people coming out and saying, I don't want to be the stupid one who buys at an all-time high in home price at when interest rates are higher as well. And we're starting to see anecdotally evidence of that. You're starting to see a few more price drops, a few fewer bidders on homes. Homes sit on just a little bit longer on the market. Don't get me wrong, there's still tons of bidders for houses out there. But you're starting to see that taper off just a little bit because you're that nth buyer who just wants to get in now because next year they're not going to be able to afford a house. That person is starting to wait. And I think that that's what we're seeing more broadly in the market as well, with consumption and with purchases and with confidence. So I think that, to Tom's point, I think that he's exactly right, that you're starting to see that demand just begin to taper off at the edge. Again, continue to rise, but a little bit at a slower rate. Moving to actual earnings results. We're starting to get some earnings results in. We've got about 10% of the market in terms of reporting earnings, and we've actually posted some pretty good results. The average sales result is beating estimates by about 4.5%, which is up from 2.5% last quarter. So you're seeing better earnings relative to expectations than you saw even last quarter. Same thing with earnings surprise. That's beating by about 25%. Last quarter, that was about 15%. So you're seeing good numbers relative to expectations. You are seeing a little bit of a tapering of margins. Margins are contracting a bit because sales are going up, but the costs are also going up as things reopen, as people travel, as corporate travel comes back. You're starting to see that the cost side of the equation is going up as well, but still, you're still beating analyst estimates on average. And we see that even in the results that we had yesterday evening and into this morning. So just beginning off with Visa, because that was a great story, and it really gets to what's going on with the consumer. You had transactions that were up 19%. You had total payment volume that was up 17%. Both of those were better than expectations, and it was driven by cross-border activity. Cross-border activity is very high margin. This is influenced by travel demand. If people are traveling, that's high margin, and that's good for Visa's revenue. So they actually upgraded their guidance for the full year in terms of revenue, saying that travel demand rebounded sharply after the Omicron wave in January. And this comes despite suspending operations in Russia, comes despite additional currency headwind because of the strong US dollar. And they say, and I quote, "While there are uncertainties created by high inflation, supply chain disruptions, rising interest rates, and the invasion of Ukraine," and I quote, "there is no evident impact on our global payments volumes." This is Visa. I mean, I can't think of a better consumer driven stock than Visa. And they're saying no evident impact on our global payment volumes. I think it is important to note that just because payment volumes aren't going down doesn't mean actual total number of units purchased is going down. If you have inflation up and you might have actual units down and prices up, which gets you to the same payments number. Having said that, I think it's a good sign. I think it's a good sign that the consumer is relatively strong. They're still spending as much as they were. And right now, we're still not seeing a ton of credit impairments on the consumer spending side. Tom, any thoughts on Visa?
I mean, it was just a super banner number. I think we were all worried, going into earnings yesterday. We've had some real stumbling blocks. Anything that is even off by a little bit has just been absolutely punished. And to see Visa come through and not just have good numbers, but also have the stock be up pre-market is a really good sign, because it's just been one of those, couple of weeks where everything gets punished. If you're off by a cent, you're getting punished. And so just to have something that beat and exceeded expectations and is up, that's very strong for the market. I think it's going to be a nice day where we have a little bit of stabilization just with the numbers coming through.
I think Visa will be a really good tell today. It better finish up. But if it goes up from here throughout the day, I think that's a good sign, because you're getting real money in there saying, okay, this is actual good news, and they're buying. But pre-market and aftermarket, you just have thin trading. So that's not going to move the needle a ton. But if we start to get some real money flowing into the stock during the trading day, and you open at 4% and maybe you pull back to 2.5%, but then you close up 6-7% at the end of the day, that's a really good sign for the market. So that's something I'll be watching closely. Also, we saw earnings from GM. They had a good result. Some of it was a tax consequence of reconsolidating their cruise business. But more broadly, they are seeing some volume cuts as a result of supply chain disruptions, but pricing is more than making up for that. They reiterated guidance, which analysts did not expect. Analysts thought there was going to be a cut. They actually reiterated guidance for the full year, talking a lot about electric vehicles coming in next year and into 2023 with the Equinox and the Corvette. I think it was a good quarter. I need to review the conference call. There was a whole bunch of conference calls yesterday, and I haven't got to this one in its entirety yet, but I think that's a good sign for General Motors. Microsoft, their cloud business performed very well. Their guidance was pretty strong as well. Now, I am a little bit nervous about what's going to happen in their computing segment, their Surfaces business, their Windows business, because I do think that that unit is going to begin to taper off, as they alluded to on the conference call. But I think overall, Microsoft had a good quarter. Now, finally, we'll talk about Alphabet, or Google, as it's known. And for these guys, the earnings result actually missed expectations. Part of it is because they had a big reduction in their investment portfolio. They have a ton of cash that they invest, and the market was down in Q1, so they had a big reduction in earnings per share as a result of that. But part of it was also YouTube. So what's going on with YouTube is a few things. First of all, you had some advertisers in the direct response area pull back, especially in Europe. And they pulled back because of the Russia-Ukraine situation. They weren't doing as many direct ads that way. You had a currency impact as well. But then finally, you just had this shift from YouTube, or the base business, to YouTube Shorts. They're now seeing 30 billion views per day on YouTube Shorts, which is a huge new business line for them. They're not monetizing it yet. So if you shift from YouTube to YouTube Shorts, there's going to be a natural reduction in revenue as a result. Analysts are attributing this to TikTok cannibalization. My view is that I think that Google actually has a decent handle on this. They're not as bad as Facebook. They're better operators. They have a more diverse business. Tom, what are your thoughts on Google, Alphabet? They're seeing a lot of demand on the travel side. That's a high margin business for them, on the travel searches, on Google Flights, etc. I'm feeling fairly favorable to Alphabet after I actually analyzing the results. But I know some analysts are concerned with the YouTube side.
I think that it's definitely a buying opportunity. I don't think they definitely missed, but they didn't miss by much. And while they are being punished, and initially the stock was down a lot more than it is now, pre-market, or I guess post-market yesterday afternoon, I think it's an opportunity. I think that Google ultimately, in the Google versus Facebook advertising conglomerate space, I think is ultimately going to be the winner. I think that the split coming up is going to be very positive for the stock price. So I think that, despite the fact that trying to shove, $3,000 a share stocks into portfolios is tough, I think it's an opportunity. I think there's definitely some upside there. I think that, if it was really bad, they'd be down a lot more. They aren't down, 30% like Facebook was when they reported earnings last and just got absolutely shellacked. I think that, the fact that it fell initially on soft numbers and then starts to rally back, I think it's highly likely that they could get flat or even up today, particularly if we see strong momentum in the market. If we start to see, like you were saying with Visa, where it starts to crater a little bit, if we have a day where, last week Blackstone absolutely crushed it, blew it out of the water, was up 7-8% pre-market and closed down 6%. If we start to see Visa go negative, I think we see Google go very negative. But, I think there's a lot of positivity in the market this morning. It feels like, yesterday was the tough day and today is going to be a little bit of a recovery day, but, the markets haven't opened yet and there's a lot still to be seen.
Yeah, there sure is. And we have Facebook tonight. We have Qualcomm tonight. Qualcomm is a huge supplier into Apple, so that'll be a good read for tomorrow, because tomorrow evening we have Apple. There has been some talk about iPhone sales slowing in the last month, so we'll see what happens with Qualcomm. PayPal, which was along with Facebook and Netflix last quarter, was really the gongs of the quarter, and not in a good way. So see if they can right the ship. And then Ford will also report earnings, so seeing if they can deliver the same way GM did. They will probably be talking about the F-150 Lightning, which I believe is just rolling off the assembly lines now, and seeing how sales of that vehicle is going, as well as more commentary on the supply chain. GM said it was improving a little bit, but we've seen that this goes in fits and starts, and with these shutdowns in China, who knows what's going on with that going forward. So with that, we'll talk about all of that tomorrow. If you have any questions on any of this, let us know. There's a whole bunch to digest. We also have a GDP number tomorrow. So please shoot us an email, put in the chat, and we'll try to be responsive as we can to your questions and give you as good transparency as what we're thinking as we can. So with that, we'll leave it there. Have a great day, and we're going to get back to work.